versus 18.4% as well. Nigel's going through some of these numbers, but Nigel, from the front line numbers that we have right now, the revenue, margins and EBITDA, what does it look like?
Well, these numbers are disappointing actually, Mangalam. You know, if these are the numbers and this is no one-off, because there is a benefit that they've got of lower power and fuel cost, but that margin that was flashing on the screen, well, that's a bit of a disappointment. I'll tell you what, you know, there's no cooling off on the freight and forwarding expenditure, not much at least out there. On the power and fuel cost, there has been some decline, but maybe the street was anticipating a little bit more of a decline out there. And what's gone up actually on a year-on-year basis is the other expenditure. So we'll require some clarity on that front. This margin number for the time being, that's a little bit worrying because the top line is pat in line with what we are working with. We're waiting for the volume number. To give you a sense, we are working with volume growth of close to around 5.5 to 6% approximately, which is more or less in line with what the sheet was working with, but we're expecting pricing to remain weak. So just trying to get out further details on that front. There is some cooling off on power and fuel costs, but we'll have to wait for further details. I think we have got operations. Yes, domestic sales volume growth is around 6%, so no worry on the top line. Energy costs actually are lower by close to around 17% on a year-on-year basis because of the reduction in fuel cost. But the raw material costs, they rose by close to around 1%. That's attributable to the increase in cost of fly ash. So, you know, that's the key reason why, in fact, these numbers could be a little bit softer. Volume growth in line. Maybe the realizations were under pressure, but it appears it's as much as expected. And maybe they have not got that benefit in terms of operating leverage on the raw material costs, which explains this miss out there. Well, let's get in Ronald, the Associate Vice President at Sharekhan, by BNP Paribas, who joins us. Hi, Ronald. Good afternoon. Good to see you win. Well, volume number, no worries, but the margin picture is a little bit worrying, you know, which our ticker team has put out there. Could you tell us your first take on the numbers?
Yeah, actually, we were estimating around 5.5% volume growth. So, volume growth, as you said, yes, in line with the estimates. But we are expecting around 18.8% operating margin, a little over 1,000 rupees EBITDA per ton. So that we need to check whether that has come in line or not. But overall, we have seen that Q1 has been weak in terms of, like in Dalmia's call also, there was a highlight that 2 to 4% volume growth was only there for the industry. So Dalmia and UltraTech, reporting 6% volume growth is good enough for Q1 in terms of, they have been trying to, gain market share, and that may have led to lower realization and a little bit, off it on the EBITDA per ton. But Dalmia's performance in terms of EBITDA per ton was better than expectation.
That's correct. But, the street expects the best from the largest player, right? So I guess that's the reason why, in fact, the stock is pulling back a little bit. And as we were just talking about, the stock has as is rallied, I think, 25-30% just in the last 1 year. What's the view on the stock, Ronald? The stock is down 3% as of now. There seems to be some pressure on margins, and it will continue in all probability for the coming quarter as well, because pricing is still weak, as we know, and we're already in a seasonally weak quarter. So if the stock falls, say, another 2-3% from here on, would you be a buyer?
Yeah, definitely. Considering the strong pullback, the strong run-up they have seen, there would be, pullback. So, 4-5%, single-digit pullback should be a buying opportunity for the stock. Pricing environment will remain weak, as exit prices for Q1 are still 3% lower than the average Q1 prices. So, pricing environment will be weak. But all eyes would be there on Q3 in terms of demand and pricing. That being said, all the cement players are, trying to gain benefits from the operating cost per ton. So what is UltraTech's view in terms of, getting more out of OPEX per ton? Each and every company has certain targets of reducing operating cost per ton because the pricing environment may not remain favorable for, at least for H1 FY25.
Okay, all right. Ronald, thanks for that quick first analysis. Appreciate you being with us. That's UltraTech, disappointing, and the stock's dealing with it, 3% down. I guess, Nigel, you said it, right? That from the largest player, from the big giant, the expectations usually run higher. And there's a miss on that margin front.
I'll tell you the problem, Surbi. The problem is that, the industry didn't grow that much, but UltraTech wants to grow better than the street. Something's got to give, right? And it appears pricing is giving away right now. The large, they want to get larger. The smaller guys are going to get gobbled up But in the interim, there's going to be pricing pressure. So in the longer term, it's going to be good, all this entire talk of consolidation. But in the near term, everyone wants to stand their turf. They want to get, a higher amount of the market share. And just one more quick word, we'll wait by for further details. But for the time being, just pull up the intraday chart of Orient Cement as well as India Cement. Plenty of buzz yesterday. As of now, I've not yet seen any mention of that. The street expected something or the other to come on both these two fronts. Officially, we know that, UltraTech has gone ahead and picked up more than 20% stake on India Cement. And yesterday, the stock was up close on 10%. As of now, there's no mention as yet, but we'll wait by for the press release. So that's why, in the last few minutes, the stock actually has come off the high point of the day. And no mention with regard to Orient Cement as well. Not yet, at least. That's the key word in there.
Well, cement, you never know.
Yeah.
So much going on.